From pole position to pit stop, the Euro's rally runs out of gas after comments yesterday from ECB chief Mario Draghi. The euro hovering around 134, pretty flat on the day, but that's down almost 2% this week, and that would be on for its biggest weekly fall in 7 months. Joining me now is Ian Stannard, Head of European FX Strategy at Morgan Stanley. Good to see you again, Ian. Well, was this Draghi and the ECB's, Draghi's first foray into what we call the global currency wars?
Well, I think we need to be a little bit careful here because the introduction of the euro into the ECB statement was very much in the context of monetary policy and in the context of the euro's impact on price stability. So the way in which the ECB is going to be monitoring the euro is very much the impact and the feed-through into inflation. So in a way, this is very much a recognition that the rise of the euro is going to start to have an impact on the economy of the eurozone, but it's not a direct move into the currency wars, I believe.
As you well know, the traders on your trading floor, they'll pay attention to that, but really what they want to know is, the ECB is watching this now. So does that mean that we've got more euro weakness to come?
I don't think so. I think we are in a situation whereby, yes, the currency is now part of the monetary policy framework, and it is something that's going to be watched. But by monitoring the currency and by monitoring short-term interest rates as well, I believe that the ECB has put in place a bit of an easing bias, although conditional easing bias, which actually provides quite a supportive framework for asset markets within Europe. And that's going to continue to attract foreign investor inflows. And remember, that's the main driving force for the euro. So this could actually be quite euro supportive. In the near term.
And if that's the case and the euro goes up to 140, 145, say, are those the kind of levels that might prompt Draghi to come out with more forceful variable intervention?
I think we are in a euro overshooting mode, and I think we are likely to see, after this initial correction, for the euro trend to continue as we see those portfolio flows moving back in. I think there is now a risk that we do see the euro extending those gains, and we could well see a move up towards the 140 area. In fact, there has been an overshoot target for the euro. And I think at those kind of levels, that would start to prompt a more forceful response from the ECB.
Okay, so you think the euro's going to head back higher again. Where best to play that? Is it against the dollar, or is it against, say, something like sterling, which seems to be under a bit more pressure?
Yeah, I think euro sterling has been an interesting across that has moved quite sharply higher, is undergoing a correction as well. And we could well see renewed opportunities in euro sterling. But I would also be looking at euro yen, because I think one of the big drivers for currency market trends currently is the yen liquidity and the yen weakening trend. And I think that's going to be very much remaining in place. And in fact, we could see that enhanced further by the implementation of the policy changes in Japan, which are exceeding market expectations currently. So I think the yen weakening trend will remain in place, and that will provide the fuel, I think, for these currency market trends. So euro-yen, I think, will remain the leading indicator in these currency moves.
Okay, Ian, thank you very much. That was Morgan Stanley's Ian Stannard, and our chart point today is car maker Peugeot Citroën. The ailing car maker crawled out of a ditch only to tumble down a mountain. The reason? Big write-downs cheered investors earlier on, but only to have their hopes dashed of a French government intervention. French Finance Minister Pierre Moscovici warned Peugeot to keep its house in order and to focus on its alliance with General Motors. And finally, on this day in history, 1971, that's what, 42 years ago, the Nasdaq stock market index had its debut as the world's first electronic trading platform. Today, companies quoted on its tickers have a total market cap of some 5.4 trillion US dollars. That's it for now. I'm Jamie McGeever. This is Reuters.